Hello, I'm Anna Keane. You're watching The Big Story on Australian Broker News. It's a bloodbath. That's how an ING Direct spokesperson has described competition among lenders in the current market. Director of First Choice Mortgage Brokers Tony Bice agrees at the moment lenders are fighting for market share.
Market share is getting tougher. This time last year, I think we're down 20% on housing volumes, which means the pie is smaller. So a lot of the lenders are looking for market share by offering these incentives.
We're seeing all sorts of offers and positioning going on in the market. So in terms of competition, it is pretty fierce out there. There's certainly no doubt about it.
The banks are doing nil application fees. I mean, I don't know that there's a bank in the country at the moment that's not offering a nil application fee, where 2 months ago it was a point of differentiation.
You've got banks saying we've broken away from the pack, we're doing our own thing. There's all sorts of interesting little games being played behind the scenes.
LVRs are at 95% capitalising mortgage insurance. A few months back, it doesn't seem that long ago, that the maximum LVR in some lenders was 85%.
Banks breaking up with each other sounds nice for consumers. However, FBAA President Peter White says he's worried about ploy tactics.
The greatest concern I have with some of those advertising that is actually creating more competition in the marketplace is that if today a bank says we've broken away from the pack, does that mean history says it was all collusion, that they were all working together, which is why the competition wasn't there? Because you can't break away from something unless you were a part of that pack in the first instance.
In this kind of mortgage climate, some have raised concerns we could be seeing a return to pre-GFC style irresponsible lending. However, Head of Broker Sales at Macquarie, Doug Lee, says there's no cause for worry.
I don't see this as a return to any bad lending practice or anything. It's just, again, it's a part of what's happening in the market. It's a cyclical thing in the market, and if one lever doesn't work, then you try to pull another lever. But it's certainly not a return to any bad lending or anything like that at all.
The analogy of pulling out levers from the pre-GFC days is nothing new. Banks have been turning off the tap and turning on the tap for many, many years, and it's all designed around when they are confident that there is a buoyant market, which we're seeing now through consumer confidence and market confidence. They're obviously in a position with their funding lines and their ability to be able to lend and attract market share. That's what we're seeing now. In a different market, and we'll use the GFC as an example, there was no consumer confidence. The market was quite tight, if you like. Lenders weren't lending. I mean, LVRs were at 85% with some lenders.
It's been going on forever. So yes, there is more competition. There's some interesting question marks that sit behind it. Competition is great, but what government needs to do is to support that non-ADI sector to ensure that the banks don't run rampant on their own little agendas versus having some true competition sitting out the other side of it.
For more on the lending bloodbath and other mortgage industry issues, click around the Australian Broker News website. I'm Anna Keane. See you again next week with The Big Story.